I'm James Turk. I'm a director of the Gold Money Foundation. I'm here in lovely Sydney, Australia, with best-selling author and founder of Casey Research, Doug Casey. Doug, it's a pleasure to be here with you today.
As with you, Jim.
We're both speaking here in Sydney at the Minds and Money Conference. I'd like to start out, if you could just sort of summarize some of the conclusions and thoughts that you had in your presentation this morning.
Well, I've actually got my notes in my pocket, but it would be inappropriate for me to read from my notes in this interview. Essentially, what I told these people, as I put my thoughts together to do my speech, I didn't really know which way I was going to go, but they asked me to answer several questions. And as I addressed the questions that the promoters of the show wanted me to answer, I was forced to crystallize my thoughts. And I think that the mining business as a whole is very problematical. I've always felt somewhat sheepish saying that I'm around the mining business because people think you're stupid. I mean, it's a 19th century choo-choo train business where you're moving dirt at a time when everybody else is developing magic technologies and so forth. And it's a tough business because people have been looking for minerals forever, and most of the big deposits, rich deposits of everything, have mostly been discovered. And increasingly, we have to go to larger and larger, lower and lower grade ore bodies, which become more and more problematical because these NGOs and so forth hate to see you raping the earth. So it's a terrible business, actually. And especially getting into the business now after commodity prices have been in a 10-year boom. I'd rather buy anything cheap than after a 10-year bull market. So anyway, I was kind of the wet blanket with all these mining guys who were saying how we're all going to become, if not millionaires, maybe billionaires. And I was saying, you know what? We've had a good long party already. Maybe we should chill it a little bit. So that was the essence of what I said.
Despite all of the issues, the political issues, the environmental issues, the NGOs and everything else, you still think there's a boom in the mining stocks coming?
I do, because I've been involved in this sector since 1971, really. And in that time, I've seen more than a half a dozen real booms where the market as a whole for junior mining stocks has gone up roughly 1,000% and subsequently fallen roughly 95%. They fall more than they go up because most of them are intrinsically worthless, these stocks. And I think with the governments all around the world creating trillions of currency units in a futile attempt to prop up the old economy, some of those trillions of currency units are going to find their way into commodities, particularly gold, and some of that money is going to find its way into these junior mining companies, which are actually the most volatile securities on the face of the earth, more volatile than the internet stocks ever were. So I think there's an excellent chance, notwithstanding the fact that mining is a lousy business, I think there's an excellent chance that we're going to see a real bubble in these mining stocks. And it could be the biggest one ever.
Now, do you mean all mining stocks, or do you mean just the juniors? When you say juniors, how do you define that? Are the smaller producers or just the pre-production companies?
Well, as you recognize, first of all, there's about 5,000 so-called mining companies in the world, more or less. That's a rough number. 90% of those only have gold or nickel or silver or whatever they're supposed to be going after. The only gold they have is printed on the front of their share certificates. They don't have any intrinsic value at all.
With very little prospect of ever finding gold or nickel or whatever.
Yeah, very, very little very little prospect of doing that. So you narrow it down. So maybe you've got 500 companies out of the 5,000 that are worth investigating further. At this stage, though, I don't want companies that are just a hope and a dream and a promotion. I don't want a company that, as Mark Twain says, is a hole in the ground with a liar at the entrance, which is how he defined a gold mine. I'm looking for companies that have an actual deposit that you can see is possibly economic, that the people running it are solid and have track records and are proven commodities. That rules out most of the remaining 500. That are adequately financed, rules out more of them. That are in the right political jurisdiction, because of course government is the major enemy of all creative enterprise, but mining in particular. So you put these things through a screen, and those are the companies that I want to own, and I think will be the biggest beneficiaries of what I hope is this bubble.
Yeah, just going back to the presentation that you gave this morning, one of the things you made quite clear is your thoughts about what you call the Greater Depression. Could you expand upon that a little bit?
Yeah, the first thing I like to do, of course, is when I use that word depression, is I like to define my terms, because people tend to throw terms around in a nebulous manner. And when that happens, it's proof they don't actually know what they're talking about. So let's define the word depression. I use three broad definitions of the word depression. The first broad general definition is it's a period of time during which most people's standard of living drops significantly. And I believe that we have entered upon something that I call the Greater Depression in about 2008. A proof I would offer for that is this. Very briefly, since we're not really discussing economics here, it's that the way you become wealthy is by producing more than you consume and saving the difference, okay? So the net savings in a society provides the capital to expand, develop technologies, and so forth. The problem that we have today is there is no net savings in the Western world. It's all debt, trillions and trillions of dollars of debt on most levels. And what that means is that we've been living out of capital accumulated by generations past, and we're living out of projected future income.
The debt servicing obligations that you have would be coming out of future capital accumulation.
Exactly. So as far as I'm concerned, we've gone past the tipping point, and the Greater Depression has started. Using that definition as a period of time when most people's standard of living falls significantly. But there are other definitions that I use too, which are helpful. One is a depression is a period of time when the business cycle climaxes. Now, business cycles in the West last typically 4 to 10 years, but we really shouldn't even have business cycles. If we lived in a free market economy, there'd be some reasons for fluctuations, but business cycles are really created by the government's debasement of the currency, which is called inflation. It causes people to do things that they otherwise wouldn't. This is what causes the business cycle. One of the things is, like debt, it makes people tend to think they're richer than they really are. So I'm of the opinion that since the last depression ended in 1946, and that depression lasted from 1929 to 1946, World War II was definitely part of that depression, we've been in a new super cycle. And the last part of it, since about 1980, has been driven just by debt. So that leads me to my third definition of a depression, and it's a period of time when distortions and misallocations of capital are liquidated. And I expect that if you're invested in things that might have looked good over the last 30 years, they're going to look very bad in the future, because I think the world's going to change radically over the next generation.
Mm. And you expect this Greater Depression to last as long as the Great Depression? If that was 17 years, are you looking for 17 years from 2008 going forward?
Yeah, well, it's very tough to predict that, but let me say this. It's that the economic depressions are, by and large, products of political intervention in the economy. And they can last as long as you'd like. The Soviet Union had a depression that lasted from 1917 to past 1990. Chinese had a depression that lasted from 1948 to 1980. It can go on as long as you'd like a depression, too. It'll be over when these governments start to voluntarily or involuntarily free marketize their economies. And, but there are such severe problems. I mean, it's going to take a long time for this thing to wind itself down. But there's some good news, and that is this. It's that there are two things that make things better in the world. One is individuals, as individuals, working for their own interest. And when people think as individuals and for their own future, they want to produce more than they consume in whatever they're doing and save the difference, okay? That builds capital. So I'm counting on the 6 billion people in the world to each build their individual capital by savings, number one. And number two, advances in technology. And I'm sure that that's going to continue as long as there's capital to finance it. So, no, the depression is not going to last forever. And it's a question of whether those two influences in the free market can overcome the dissipation of capital caused by the state.
Well, that's just what I was going to get to, because number one of those two things that you're talking about, the individuals building capital, I mean, aren't the actions of most countries today destroying the middle class, preventing them or making it extremely difficult for them to accumulate capital?
Yes, and this is one thing that concerns me a great deal, because the problem is the productive parts of society, which is basically the middle class. I mean, the so-called upper classes can take care of themselves. They can hire the lawyers to interpret the laws to their advantage, the accountants to keep their taxes down, the investment advisors to get them into good deals. They'll be fine, unless things get so bad that we eat the rich. And lower classes don't have anything anyway, so they're not an element. It's the middle classes we're talking about. And the problem is this. It's that if those people produce more than they consume and save the difference, what do they save it in? They save it in dollars or whatever the national currency is. And the problem is this, is these stupid governments all over the world with their quantitative easing measures are basically going to destroy their national currencies, which means destroy the savings of the middle class. And that's going to be a sociological earthquake, because I'm afraid that almost all the currencies of the world over the next generation are going to reach their intrinsic value, which is essentially zero. And it's going to wipe out the middle classes with it. So this could be really quite serious.
So the Greater Depression is not just the economic repercussions, but you're suggesting political and social repercussions as well.
Yes, and I wouldn't be surprised if we saw a lot more of the type of thing that we saw in London recently, or even in Vancouver recently, because when people find that they can't make ends meet and they feel that they aren't going to be able to improve themselves, they turn violent. It's just what happens with the human chimpanzee. He does this type of thing. So the sociological implications could be nasty. The political implications could be nasty too, because all these people are they think the government is a magic cornucopia. They think that the government can do this, do that, make everybody wealthy, raise everybody's wages. This is ridiculous. The government has nothing except what it steals from the society as a whole. But there are lots of politicians that will try to cater to this, and you could get people with a dictatorial bent that promise the bourgeoisie all these things. They get into office and they grab the economy in a stranglehold. So I think we're in for sociological rough times, economic rough times, financial rough times, political rough times, and maybe even military rough times.
In what sense?
Well, because certainly in the case of the United States, one of the few departments of the government that has some respect from people is the U.S. military. Now, I don't consider it anything more than a heavily armed version of the post office. But nonetheless, everybody is apatheticizing the military at this point. The U.S. spends more on military than basically the rest of the world put together. The military is like a giant gold-plated hammer. And the problem with having a hammer like that is everything starts looking like a nail. And it is. That's what there are interventions in the Middle East and 100 countries around the world where we have active troops stationed. So the problem is not only that, though, it's that when things start going bad domestically, politicians, for obvious reasons, like to say it's somebody else's fault. It's those damn Chinese that are taking away our jobs by sending us all this cheap stuff, which is increasing our standard of living. Or it's those damned Arabs that are driving up the cost of oil by not opening the spigots. I mean, these are idiotic things to say, but you know, they play well in soundbite TV.
Well, it's always easier to blame someone else rather than actually look at what the true causes of the problems are, which tend to start at home. You know, I remember a conference back in the early 1980s, and you'd said at that time that in 10 years the Soviet Union was going to collapse. And it seemed a little bit outrageous at the time, but in fact that's exactly what happened. And some of the things you're saying now, are you saying them with the same type of conviction that you did back in the early 1980s in terms of your outlook with the Soviet Union?
Well, I'm not a fortune teller, but I like to look at what I think are the facts and draw logical conclusions, even if they're not conclusions that are particularly pleasant to draw. Because like everybody else, I like good times more than I like bad times. Good times are more fun than bad times, and they tend to be a lot less dangerous. But, you know, you got to recognize that we're just part of history, and there have been wars and depressions and all kinds of terrible things that are part and parcel of history. What did Gibbon say? He said, history is little more than a catalog of the, what did he say, the disasters, misfortunes, and of mankind. So history is going to continue, I'm afraid.
And Santayana said if we ignore history, we're doomed to relive it. What is we as individuals should be doing and thinking about if this scenario that you're describing plays itself out in the months and years ahead?
Well, I'm going to operate on the assumption that the U.S. is going to be the epicenter of this coming earthquake. So I don't particularly want to be in the U.S. At this point. It's too bad. And I say the U.S. because as far as I'm concerned, America, which is an idea, and it was an excellent idea, a unique idea, America is dead and gone. It's been replaced by the United States. And the U.S. is just another one of 200 nation states that cover the face of the globe like a skin disease at this point. So I think that one thing you should do to protect yourself is you've got to diversify politically, because your main danger is political. So you've got to diversify politically first.
So geographic diversification of one's assets.
I think that's critical, actually.
Yeah.
I mean, not to take a rather catastrophic example, I mean, every Jew in Germany that didn't diversify himself before was too late lost everything. Every Russian that didn't diversify himself before the 1920s lost everything. Every Vietnamese that didn't do it before 1975 lost everything. It's constantly happening. Every Cuban that didn't do it before 1959 lost everything. There are scores of examples I can give you right now. Mm-hmm. So I think that the U.S. is next on the dance card from that point of view.
Mm. If we diversify internationally, what do you diversify in? What types of assets would you recommend at this time of the business cycle and economic cycle? You know, given the fact that we're heading into, or I guess we're already in, but going deeper into this greater depression.
Yeah. Well, that's another problem as we speak. now at the tail end of 2011, there's almost nothing in the world that is really a cheap thing, a real bargain. Even gold, which I'm still very friendly towards, has gone up about 7 times in 10 years. Well, it's going higher, but it's not being given away like it was 10 years. Same with silver. There's really nothing that's cheap. I mean, stocks, are they cheap? Well, I'm agnostic on the value of stocks. But I'll say this, I remember as late as the mid-1980s when 3 major stock markets in the world, the Spanish, Belgian, and the Hong Kong Stock Exchange, all were yielding 12 to 15% in current dividends, selling at 2-3 times earnings and a fraction of book value. So that's a bargain. I don't see that anywhere. Can't be in real estate. The real estate bubbles burst, and once the bubbles burst, it doesn't reinflate for a long time. It's very problematical. This is one of the things that Richard Russell said, and I'm a big fan of Dick Russell, is he said, during a depression, the winner is the guy that loses the least. So I think it's a question of keeping capital together.
Yeah. Best way to keep capital together, though, it would be what?
I think you've got to buy a lot of gold. You've got to buy a lot of silver. You've got to keep it, a lot of it, outside of your home country. I think you've got to buy foreign real estate. But I think you've got to take advantage of these politically caused distortions to speculate. And by speculate, I don't mean gamble. Speculate is a word that's misused. To speculate is to position yourself to capitalize on politically caused distortions in the marketplace. If we lived in a free market society, which we don't, it would be very hard to be a speculator. But we don't live in that kind of the world. So it's pretty easy to be a speculator. Like right now, one of the best speculations I can think of, it's not easy to do this, but it's to go short bonds. Because bonds, which is the biggest market in the world, actually, is also the most overpriced market, and it's going to be a disaster. Interest rates, which are, depending on which bond, which interest thing we're looking at, 2 to 3, 4, 5%, something like that. Those interest rates could double, triple, quadruple easily, which means that the bonds go down proportionally, in addition to the fact the currencies that they're issued in are going to go down. So that's a good speculation where you could grow in capital. I think
but it's also good advice to just get out of bonds, even if you don't want to speculate by going short. Don't be long.
No, absolutely. If you own a bond, get rid of it. Get rid of it while there's still a buyer.
Regardless of the currency.
Regardless of the currency. I hear this, people talk about people are going to panic into U.S. government paper because it's safe and secure. That's complete nonsense. I mean, the people that say that, I mean, I lose respect for them. Yes, U.S. government paper is liquid, and that's a reason to hold it, because you can buy it and you can sell it. You can't do that with a lot of things. The big money can't. But I don't have any interest in owning it, because the dollar is going to be a hot potato. There's 6 trillion, 7 trillion, nobody knows, U.S. dollars outside of the United States owned by foreigners. And unlike Americans who must settle their debts and purchases with dollars, it's legal tender, foreigners don't have to hold dollars, and they recognize increasingly they're holding hot potatoes. And there could be a rush to the exits. Not that they want to rush to the exits, because everybody gets hurt in a panic. But those dollars are eventually, the standard of living in the United States has been artificially increased for many years, because what we've been doing is exporting dollars, which the government prints up, and all those nice foreigners send us Sonys and Mercedes in exchange for the dollars. It's been a great trade. We give them paper, they give us real wealth. But it's going to turn around. And when those dollars come back to the U.S., the titles to U.S. shares and U.S. real estate and other assets are going to be packaged up and owned by other people.
That assumes the U.S. government allows those dollars to come back into the United States. I mean, you could have capital controls imposed to keep those dollars outside the U.S.
You're absolutely right, and I think that's very likely because they won't want that to happen.
So owning dollars is bad enough, but what you don't want to do is own dollars outside the United States.
It's a dog's breakfast. I mean, there's so many ways that this could come down, and almost all of them are ugly. I don't see any happy ending to this. I've long said the only way out of this that I can see is if friendly aliens land on the roof of the White House and present us with some kind of a magic technology. But I don't think that's going to happen. There's no way out. This is a existential nightmare, actually.
So let's get back. Getting out of bonds makes good sense. Shorting bonds is a good speculation. What about other asset classes?
Well, I think that
Real estate's a bust.
You know, real estate is a very localized market. Last month, I went through the Middle East, and one of the reasons I went to Cairo, among other places I went there, is because I'm involved in a real estate deal in Cairo. These wonderful old buildings on the Nile River, built during the Belle Epoque days when Cairo was a place when the jet set equivalent of that day. Wonderful weather, wonderful old buildings, apartments with 12, 14-foot ceilings made out of marble and all that. But of course, since Nasser, they've all been rent controlled, they're falling apart. Well, we can get them for almost nothing at this point, fix them up. We think we can double our money in 2 years on a cash basis. So I'm doing that. I'll buy anything, anywhere, if the price is right. And so that's one thing that I'm doing. But that's an anomaly. There's always anomalies for real estate. But as an asset class, I think real estate is heading down, or is at best flat, for a generation, quite frankly. That's not to say that maybe in 5 years, I'm guessing wildly, perhaps I can buy houses in Las Vegas, and maybe the government idiotically will give me a no-recourse, low-interest rate loan just to buy the house and take it off the market. They'll probably do something like that. And I can make money having the mortgage inflated out of existence, even if the property itself doesn't go up. I do like the idea of a bubble. I don't like the idea, but I do think it's highly likely that there will be a bubble created in junior mining stocks, good ones, as we discussed before.
Just to drill down a little bit on real estate, distinguishing between, property that already has buildings on it, be it residential or office buildings or plants or whatever. What about just raw land, farmland, timberland?
Well,
as a way of preserving wealth, because that is real wealth, isn't it?
It is, and I personally, along with with some friends and other deals, we bought a lot of land down in Argentina and Uruguay not so long after they destroyed their economy in 2002. Got it very cheap. A lot of it's productive, and I think a good case can be made for owning productive farmland. No question about that. I'm especially friendly towards cattle, because as I look now at and this has been true for some years, this has been true for generations, cattle are very, very cheap. Nobody's made any money in cattle for a long time. Cattle herds all over the world are in liquidation. I'm talking about beef herds. And I think that that's going to turn around. I think that if you can get into the cattle business, that's easier said than done. It's not something that just anybody can do for all kinds of reasons. But I think that's a good place to be, and I'm there. I'm also in the dairy business down there. I like that. Growing things generally. I'm doing that in Argentina because our capital costs of land are very, very low. Labor costs are very low. There's other disadvantages, but I think it's a good place to be. And it's international diversification outside of the U.S. in my case. So I like that, but there just aren't a lot of bargains in the world, in the financial world today.
But if you're doing something to defend, as a defensive measure to protect your wealth, you don't want to be in any financial asset you don't want bonds, you don't want bank deposits, you don't want any currency. You have to look to real assets. It seems to me, farmland, timberland, those types of things are a way of protecting yourself. And going back to what you were saying, Richard Russell's thing about he who loses the least in the depression is the winner.
Yes.
You have real wealth when you own farmland.
Absolutely, yeah. So I think that's a good thing to do. And one thing that you said there, I think, is worthy of commentary. It's that the financial business, the financial industry, has expanded like gargantua through this boom. It's huge as a percentage of the economy. People that are traders buying and selling and so forth with other people's money. It's ridiculous. I think the financial industry should collapse to a small fraction of what it is today. I mean, the banking business controls the world. It's ridiculous. The banking business should be nothing but what it used to be, which is a warehouse for money where in checking accounts, you pay the bank for the right to write checks and to store your money safely. End of story. And savings accounts where the bank pays you X percentage and then relends the same money, no more, to other people short term for 2X%. And banking is a very simple business. These huge buildings full of traders buying and selling with the customers' deposits, which have been inflated through the fractional reserve system, it's all going to collapse.
I agree with you on that. I like to draw the comparison to Berlin just during the period of the Weimar hyperinflation. I've seen statistics that something like 17% of the population in Berlin was doing nothing except counting money, printing money, moving money around, because the monetary system had essentially broken down. And what people were trying to do is to counteract the deficiencies of the currency of the time. And I think one of the reasons why the financial industry has built up to the extent that it has in recent years, the past decade particularly, is the same type of thing. The monetary system is breaking down, and the deficiencies of the monetary system are causing people to come up with ways to correct those deficiencies. All kinds of exotic instruments and things of that nature. So I really see that, very similar to the years going to the collapse of the Reichsmark back in Weimar Germany, to a collapse of most of the currencies around the world today, where the financial industry goes back to its normal percentage of the economy, which is really quite small.
It certainly should be. I know I was in Zimbabwe a few years ago, more or less the height of the runaway inflation, and just to buy gasoline, it was a real enterprise. First of all, the law said we couldn't buy it with our US dollars. We had to go out and buy Zim currency, so we had to buy a couple backpacks to put this stuff in, and then they counted with riffling counting machines, a couple of backpacks to fill the Land Rovers up. Huge waste of time and so forth. Meanwhile, people are bartering. It was just criminal.
Yeah. Money, I've always made the point, is central to society. It has to be as sound and as efficient as possible. And when it's not, then you have disruptions to economic activity, like you're just describing in Zimbabwe, as a matter of trying to survive rather than actually trying to produce and save.
Yeah, exactly. There's so many things that have to be changed before the U.S. can recover. And it's not just the U.S., it's actually the whole Western world is in exactly the same pickle as the U.S. is. One thing that I advocate is that the U.S. government default on the national debt. And people say, oh, how can you say such a thing? Well, I'll tell you how I can say it. It's because the $15 trillion of acknowledged U.S. debt, and it's more than that, it constitutes a mortgage against future generations yet unborn. And if that debt is going to be repaid, they're going to be turned into veritable serfs to repay it. So it should be defaulted on for moral reasons because of that. because they didn't incur the debt, but they have to pay it, so we could live high off the hog. And secondarily, I'd default on it because it will punish people that bought government debt, allowing them to do the idiotic things that they've done with that money. So I have no sympathy at all for the banks and institutions that own government paper. I would default on it, but I would go much further than that, of course.
How do you see things playing out over the next couple of months here? We've been talking longer term. Let's start focusing a little shorter term in terms of the markets. And we haven't said anything about Europe. I know you don't travel to Europe that much, but obviously it's been a center of attention for quite some time now because of the Greek situation as well as the other periphery Euro countries. Let's start with the Euro. What are your thoughts there?
Well, I've long said that the dollar is an IOU nothing on the part of a bankrupt government, but the euro is even worse. It's a who owes you nothing on the part of a bunch of bankrupt governments that won't take responsibility for it. So that's very bad, what's going to happen to the euro. And Europe itself is highly problematical. It's constipated, it's socialized, it's highly taxed, highly regulated. It has the wrong philosophical values. It's been going downhill since World War I. Europe is going to be no more than a petting zoo for the Chinese. It's going to be a source of maids and houseboys for them. So Europe is a write-off as far as I'm concerned. That's not even counting the demographic collapse that they're experiencing, except among the Muslim population, which is not integrating with the rest of Europe. And that's a potential sociological time bomb. So I'm very bearish on all of Europe, actually.
The euro will break up?
Oh, that's unquestionable that it's going to happen. And they talk about, should we bail Greece out, should do this, that, the other thing. The only answer for Greece is just what I said I'd do for the U.S. Sure, they should default on that debt, okay? The thing with defaulting, a government defaulting on its debt, is you got to remember the real wealth in the world still exists. The buildings and the technologies and the skills that people have, that doesn't vanish. It just changes ownership. But like I said, I think the people that have financed the government and should be punished, and the people that are burdened by it should be relieved of it. So yes, but that only works, as I said, if you radically cut back the scope of government in addition in all ways. And that's what should happen. That's the solution for Greece. Now, are they going to do it or not? I don't know. Those people are so used to getting something for nothing and living off the fat of other people's land. I don't know what's going to happen in Greece, quite frankly. Or the other countries that are going to follow it, Italy and Spain and France, too.
Earlier on when we were talking about the Greater Depression, you said there's going to be some dramatic changes. Is default by governments throughout Europe going to be part of that dramatic change? Because it's not just Greece that's in trouble. Italy doesn't have the financial capacity to repay its debts. Spain's questionable. The banking system throughout most of Europe is insolvent. And actually what's true in Europe is also true in the United States. There's no way the U.S. is ever going to repay its debt, as we were discussing. So is government default, do you think, going to be part of that element that you see as dramatic change in the Greater Depression?
Well, actually, I hope so. I actually hope so. But I think it's going to go way beyond just government default, because most of the countries in the world are artificial constructs. This is even true in Europe. I mean, when Czechoslovakia broke up into the Czech Republic and Slovakia, it was peaceful and inevitable and the shape of things to come. When the Soviet Union broke up into 13 countries, but Russia itself should break up into several more. It's an artificial empire, hodgepodge. Yugoslavia broke up. The same could happen to regions of the oldest countries in Europe that have been together. France, could happen in Spain with the Basques. It could even happen in the UK with the Welsh and the Scots. I wouldn't doubt that as the going gets tough, a lot of countries which are held together with chewing gum and baling wire, including absolutely every place except for Egypt and Ethiopia. In Africa, they're not real countries at all. I mean, Libya, where the war is going on, that's going to turn into a long-lasting civil war, and it likely is going to break up into several countries. All these countries, the Congo and Angola and Nigeria, none of them are real countries. They were drawn in the boardrooms of Europe, and the same is true all through Asia. It's all through the Middle East. So this is a real problem.
There are, I think, 150 countries in the world or something like that, but as I understand it, there's something like 450 languages. So your implication is that people are going to form more government based on language and the cultural and traditional associations rather than borders drawn by colonial powers, decades ago.
Exactly. Sharing a piece of government ID with somebody called a passport doesn't mean that you have anything in common with them at all. As a matter of fact, chances are that your fellow citizen in some nation state, chances are better that he's going to be your enemy than some guy living in Turkmenistan, because the guy living in the US or Australia, chances are, he's living off of your taxes. He's an active danger to you. He's voting for some politician that wants to make your life restricted and miserable. So I don't see that in the future people will see their so-called countrymen as people they have anything in common with. This is the great thing about the internet. It's that it lets you find out who your countrymen really are in the world. And I can promise you, I've got a lot more in common with people in the Congo that I don't share the same language with, I don't share the same religion, the same culture or background, but on things that I consider important, which are personal philosophy and personal ethics, I got a lot more in common with them than I do with the people that live in the trailer park down the street from me in Aspen. Or for that matter, my rich neighbors that live on Red Mountain in Aspen. I don't have anything in common with either one of them. So I think that in the future, nation states are likely to cease to exist and are going to be replaced by groups of people that find themselves around the world based upon whatever is important to them, whether it's business, philosophy, religion, hobbies, could be 1,000 different things.
So what you're describing are what you called files in your conversations with Casey, one of your newsletters. A file is people that organize on the basis of common and shared interests regardless where they live in the world, and it's made possible because of modern communication?
Yeah, exactly. It was actually a term and actually an idea that was coined by the science fiction writer Neil Stephenson, whose books I recommend highly. And he speculated that in the near-term future, this is the way the world could reorganize, because the nation state is really a dysfunctional way of organizing people. Political organization itself is dysfunctional, of course. I don't believe the government as an entity has a right to exist. It's purely destructive. It inevitably draws the wrong kind of people that are interested in power and controlling other people as opposed to controlling reality. So yeah, I think that as nation states self-destruct in the years to come, people are social and they do like to organize, but I think a voluntary form of organization, which could even include insurance companies, self-defense contracts, and so forth, might be completely transnational.
Yeah, I mentioned conversations with Casey, and before I go on, I would just like to say that I really enjoy that publication, and for the viewers of this video, you do it almost every week, and it's free. How do people sign up for it?
Well, just go to our company website, caseyresearch.com. And we have a number of free publications, of which that is one. So just push the button and we'll send it to you.
Okay. One of the other things I read about in conversations with Casey, and I want to talk about that a little bit, is what you call singularity. Can you first explain what that is, and then we can get into more detailed discussion as to how you see it evolving?
Yes, there's a guy, I haven't met him personally, named Ray Kurzweil, who wrote a book by that name. And the point he makes is that technology is advancing very quickly today, basically at the rate of Moore's Law. And we're not just talking about computers, we're talking about biotech and many other areas of technology
Which
today.
basically every 6 months computing power doubles, more or less.
Or every year, or I don't know what the current number is.
Yeah.
But
But it's a
that's
very rapid rate of growth.
very rapid indeed. And the point that Kurzweil makes is that, and you can see this happening now, we're at the stage where you can actually grow new body parts. It's possible now to grow new ligaments, to grow new veins. And this is advancing and compounding basically according to Moore's Law. So it's happening in many areas of society. And what Kurzweil posits is that in a very finite period of time, like maybe 10 years, well, 20 years anyway, we're going to reach the singularity where we'll actually be able to do almost anything in a godlike way. And what it means is that if you can survive only another 20 years, perhaps, you might be able to grow a brand new body. And not just any old body, maybe one that resembles Bruce Jenner's, who won the decathlon a few years ago. I mean, something like that. So anything is possible, and this is the best reason that I can think of for becoming wealthy, because you want to be able to afford wonderful things like that. And it's as it should be. The wealthy people are the ones that should have those things. Why? Because unless you steal wealth, the way you get wealthy is by producing goods and services for other people. You get wealthy by creating wealth. So, of course, people that have money should be rewarded with being able to buy these things.
Yeah, people like Steve Jobs, who just sadly passed away recently.
Exactly.
Just think of all the things he's done to raise humankind's standard of living through his innovations, his technology, hard work, savings, production.
If he just could have lived another 10 years, chances are not bad that a cure would have been found for his disease, and another 10 years beyond that, he could have replaced his, at that time, 75-year-old body with a nice, shiny new one.
But what's the implications for singularity in the financial sector?
Well, you know what? One of the things that have to do with the singularity is the nanotechnic revolution. And about 20 years ago, Eric Drexler, who was really the originator of the term nanotechnology, wrote a book by that name. And what he posited is that at about the time of the singularity, we will have supercomputers that are so small that they're microscopic and of unbelievably large power, quantum computers. And these things will control assemblers, which are also submicroscopic in size. And these things will, the computers controlling the assemblers, will literally be able to take apart anything and take it into its individual atoms and reassemble it into anything else. I mean, it's literally pixie dust. It's magic.
Like a transporter in Star Trek.
It's been said that any sufficiently advanced technology is indistinguishable from magic. And yes, it's possible that we're only a generation away from that at this point. So this is a good reason to, to get wealthy and hang on so you can take advantage of it, because it'll be very, very interesting at the least. And I'm very interested in being entertained, actually.
How's technology affecting gold? Mines
Well-
are becoming more efficient, obviously, but we're still producing approximately the same amount of gold every year in terms of relative increases to the existing above-ground stock. And you know, I always use the example that 100 years ago, it took a certain weight of gold to sink a shaft in South Africa. You go down 1,000 feet. You know, now they're going down 12,000 feet, and it takes the same weight of gold 100 years later, because the technology enables us to go much, much deeper. But how do you see, you know, technology? Could technology replace gold in your view as a form of money?
No, that's because money is a store of value, and technology is not a store of value because it evolves so quickly. You can't have today's technology; it can be worthless next year, and it's a medium of exchange, and technology doesn't work that way either. Look, Aristotle gave the 5 reasons in the 4th century BC, he defined the 5 characteristics of a good money. It has to be durable, divisible, convenient, consistent, and have value in and of itself. What does that mean? It has to be durable. That's why we don't use wheat for money. It has to be divisible. That's why we don't use artwork for money. You can't make change for the Mona Lisa. It has to be convenient. That's why we don't use steel for money. It takes too much to be of value. It has to be consistent. That's why we don't use real estate for money, because every piece is different from everybody else. It's not fungible. And it has to have some kind of use value, which is why we don't or shouldn't use paper as money. It can't be created out of thin air. And of the 92 naturally occurring elements, gold is uniquely suitable for use as money. That's all. There's nothing magic about it at all. It's not a barbaric metal. It's simply a convenient medium of exchange and store of value. And we could use anything for money that has those 5 characteristics, but gold has them more than anything else. It's like you don't want to try to construct airplanes out of iron. You use aluminum. The same thing, you use things that lend themselves to something, and gold lends itself to money for use as money, and silver to a lesser extent. So that's all there is to it.
I'd like to sort of wrap up here, but before we do, you know, this is going to be viewed by thousands of people around the world through the internet. Any additional thoughts or comments that you would like to leave before we wrap up? You know, I think we've covered all of the topics, how people can protect themselves for the Greater Depression, which, you know, we're going deeper and deeper into. We've covered the various markets, what types of asset classes are in favor and not in favor. Any other parting comments?
It might be anticlimactic to give any parting advice, any bon mot that sums everything up. I'm not sure that I can do it. I would just say, hold on to your hat, because we're in for a wild ride.
Yeah, I agree with you there. Well, Doug, I really enjoyed this opportunity, you know, to share all of the comments and thoughts that you've been willing to share with us, and it's very much appreciated, and I'm sure this will be very much appreciated by all the viewers of this interview.
And Jim, it is always fun talking to you.
Thanks, Doug. I've been with Doug Casey, founder of Casey Research.